Good afternoon, everyone. Today is Friday, Friday the 13th, May 13th, 2016. My name is Christian. We're looking at several different charts today. We'll also be looking in Canada and the U.S., so give me a little while here. We'll be looking at longer-term charts, all to show you some very important elements. Starting off with the Dow Jones Industrial Average. This is a 3-year chart going back 3 years, and this is weekly data. Okay, keep that in mind. So whenever we look at this, every one of these candlesticks represents 1 week of trading activity. Now, for the past few weeks, let's say 3 or 4 weeks, I've been telling you that it is time to step off of the bullish perspective and move to the sidelines, basically. And that's what we've seen here. Nice sell-off there on time period. So I'm perfectly happy with the move away from the bullish perspective. And also, we caught this nice move to the upside here. So all in all, we're very happy. However, looking at the bigger picture here, we want to know, what do we do next? And when we look at that, I want to give you guys a perspective to look through the lens that I see so that you understand what I'm talking about. Right off the bat, looking at the longer term chart again, the 50 period moving average right here, and anytime you're in a bullish uptrend, price will be on this side of that 50 period moving average, right? So price stays up here, we just have this nice little move, and you pull back there, there's a nice bounce off of that, okay? We just keep doing this until sooner or later you close below that. Now keep in mind, whenever you close below a 50 period moving average, when you're finding that bullish sentiment above the moving average, a close below it, if you got a couple of different ways you can analyze it, either by distance, how far away that you close away from it, or how many days you close below it, or how many periods you close below it. In this particular case, this would have been a very threatening situation, but the following period turned right around you right back above the 50 period moving average, so it kept the bulls in power here. Over here, we fall below it, close below it multiple periods, and that right there is a telltale that something's breaking down here. This could have been a warning, but this definitely confirmed it. Okay, so in this situation, whether you looked from the number of periods close below it or the distance from the close below that 50 period moving average, you would see that this is very bearish. Now, at the same time, it doesn't kill the market. You have to be below this red line right here to get into the bearish market, right? So you close price below the 200 period moving average and you get into the bear market territory. We're not seeing that. So what happened is you get this nice move here. It looks like a peak. You sell off. And you come back up here, test it, and you fail. You fail meaning you can't take out this high. So you get above the 50 period moving average, but you can't stay there. You fall back down. Now here you'll notice, again, you do not close below this red line, this 200 period moving average, so you don't fall into bear market territory. You come close to it, but you don't get that close below the 200 period moving average. So you run back up here and we test it again. We called that and it was not very nice. We enjoyed that. However, what did we find? Failure to take out this level. We did take out this level, so bulls are still arguing that we're trying to reverse here. It's taking us some time, whatever. But the main thing for me that I'm looking at right now, this signal right there. That's a shooting star. It's a very ugly signal, the same one that you had over here, okay? And this to me is something that is telltale of a peak, all right? So in this situation here, this looks very bearish. We see the following days to downside, also very bearish. If you've actually found a peak right here where you can't take out this previous level here, there's only one thing to do, and that's to come back down here. So this is a situation where you're looking at market rolling over, market peaking. It's very possible here looking at the Dow Jones Industrial Average. And I want to bring it to your attention because the Dow was the strongest chart that we've had been looking at. Of all the other U.S. markets, the Dow was the strongest. So that being the strongest, let's go look at the others. Okay, here we are now looking at the S&P 500 Large Cap Index, and this is the longer term chart, 3-year weekly time period. And I talked about this one last week, told you bearish. I wasn't something I would look at as a buy opportunity like that. And this one is the same overall pattern. Whenever you're in a bullish uptrend, you stay above the 50 period moving average here. And as long as you continue to maintain that, everything's copacetic. When you goes below that, multiple time periods or distance from the 50 period moving average, everything comes into question. Always breaking down here, or is this just a temporary consolidation period before going back into a bullish trend? In this situation, we sold off from the peak and we bounced back up there and tested it and failed. Notice what we get here, shooting star. All right, and then we roll over and we come back down here. And we get a lower low than we had before. All right, so this chart is already weaker than the one we just looked at a moment ago with the Dow. And then we jump here to test it again. We fail yet again, and we do multiple things. Shooting star, okay, and we get a lower close on this period than we had on this period here. So we have a high point here. Let me get a different tool. We have a high point here, low point here. Lower high, lower low, even lower high still. So this is a very bearish situation as well. Quick glance here at the NASDAQ Composite. Again, 3-year weekly time periods. Okay, you can see the same basic overall story. Bullish trend. You stay above the 50-period moving average. You close below that in several periods or a distance, and you start to bring that into question. Right off the bat, you can see that nice move to the upside here. Finds a peak, sells off, tests it, fails to get a new high. We get a nice little shooting star here, and down we go again. Lower close, and then we come up here and test it again, and again we fail with the high point here. If this is our high, it's lower than this one here, and you also notice it's at about the 50-period moving average, which is where in a bear market you see resistance forming. So what we can see on this chart is that we are actually showing a downtrend, and we have showing an increase on the sell side. That's why you got a lower high here than you had from this point here, and why you're finding resistance at the 50-period moving average when you didn't find it here. So you can see that the bearish tendency is increasing to the bearish side. Okay, so keep that in mind. Okay, a quick look here at the Toronto Stock Exchange. Again, this is a longer term 3-year weekly time period. You got the peak happening, right? You stay above the 50-period moving average, you get the peak, and you come down here and you bounce back up, and you close down here for a few times, and you come and test that high, but you fail to take out that high. Okay, now we've seen U.S. markets are starting that process, but the Canadian market, the Toronto Stock Exchange, had actually been doing that back in the 2015 time period. And so we sell off, and we come down here and we close below that dreaded red line, that 200-period moving average there. And you fall below that, you fall into the bear market territory. Okay, now we've had a nice bounce. Okay, however, this is not necessarily a bottom. We just had a massive sell-off that went on for a while, and then we get a reflexive bounce to the upside, and now we're starting to peak out. And we talked about that last week. I looked at the short term and long term of the Toronto Stock Exchange. So then again, so basically the situation here, I'm seeing a bearish condition. On top of that, if you look closely, you'll see that you've got a cross right here of your 50-period moving average falling below the 200-period moving average, and that's a bearish cross there, and that's something that's very telling of a bear market as well. So if you go around the globe, you'll start to find signal after signal after signal that's telling you this is falling apart. It's not something you get into at this point in time on a bullish perspective. In fact, you want the market to prove itself bullish before you took a bullish position. Right now, we're not seeing that. So all in all, I just reiterate what I've said before, steer clear. God bless, take care, enjoy your weekend, and be safe.